Choosing an investing app in 2025 isn't just about low fees. It is about execution, hidden costs, and long-term trust. Some apps route your trades to market makers for a profit, while others prioritize deep research and unmatched stability. Today we'll compare the top 5 US investment apps: Fidelity, Robinhood, Webull, Vanguard, and Schwab, so you can pick the one that truly fits your goals, whether you're a hands-off investor, an active trader, or somewhere in between. First up is Fidelity, a powerhouse that's great for both beginners and long-term investors. Fidelity offers $0 commissions on online US stock, ETF, and options trades, which has become a standard across the industry. They also require no minimum deposit to open a retail brokerage or IRA account, making it incredibly accessible for anyone to get started. But where Fidelity really stands out is with its exclusive zero-expense ratio index funds, like FZROX and FNILX. These funds have absolutely no management fees, which is a game changer for maximizing your long-term growth by minimizing costs. However, there's a catch with these impressive zero-fee funds. They are proprietary, meaning they are only available through a Fidelity retail brokerage account. You can't transfer them to another broker if you decide to leave. If you hold them in a Fidelity account and want to switch to, say, Schwab, you would have to sell the funds, potentially realizing capital gains, and then repurchase similar funds at the new brokerage. Additionally, these zero funds track proprietary indexes developed by Fidelity, not the more widely recognized standard indexes like the S&P 500. While they are designed to perform similarly, they aren't identical, which is something purists might care about. If I were you, I'd use Fidelity for my core, long-term investments. The zero-fee funds are incredibly tempting, but only if you're comfortable committing to the Fidelity ecosystem for the long haul. Next, let's talk about Robinhood, the app that made free trading mainstream. Its sleek interface and simple design attracted a whole new generation of investors, and it forced the entire industry to drop commissions on stock and ETF trades. But how does Robinhood make money if trading is free? A major source of its revenue comes from a practice called payment for order flow, or PFOF. Robinhood routes your trade orders to large market-making firms, which pay Robinhood for the right to execute those trades. In fact, some estimates show that around 72.8% of Robinhood's revenue is generated this way. The numbers are staggering. In the second quarter of 2025, US retail brokers collectively earned about $953 million from PFOF, and Robinhood alone collected roughly $128 million in just the month of May. This business model has been incredibly successful for them, with Q2 2025 revenue up 45% to $989 million. But this free model comes with hidden costs for you, the investor. A recent study from finance professors revealed that so-called free trading platforms can impose significant hidden costs through something called the bid-ask spread. Essentially, the price you pay to buy a stock might be slightly higher, and the price you get when you sell might be slightly lower than on other platforms. This small difference, multiplied across millions of trades, adds up. The study estimated that these hidden execution costs could be costing small investors a jaw-dropping $34 billion per year. Furthermore, the model has attracted regulatory scrutiny. In 2025, Florida's Attorney General launched an investigation into Robinhood Crypto over potentially misleading claims about its low trading costs. So if I were using Robinhood, I'd appreciate its sleek and easy-to-use interface for quick trades, but I'd be sure to monitor my execution quality closely and not assume that free truly means there is no cost involved. Now for Webull. If Robinhood is for the casual user, Webull is for the aspiring trader who wants more power under the hood. Like its competitors, Webull offers commission-free trading for stocks and ETFs, but its main appeal lies in its advanced tools and features. The platform is packed with sophisticated technical charts, in-depth research tools, and a paper trading function that lets you practice your strategies with simulated money before risking real capital. It also supports options and cryptocurrency trading, making it a versatile platform for those looking to expand beyond simple stock buying. The downside is that this wealth of information and features can be overwhelming for a complete beginner. The interface is denser and has a steeper learning curve compared to the minimalist design of Robinhood or the clean layout of Fidelity. It's built for someone who wants to actively analyze market trends, not just buy and hold. If I were you and I was an aspiring trader, I'd use Webull to practice charting, test out technical indicators, and learn advanced trading tools. It's an excellent training ground. However, I'd probably keep my core, long-term retirement investments on a simpler, more stable platform to avoid getting distracted by the noise of daily market fluctuations. Speaking of long-term investing, let's turn to Vanguard, the undisputed king of passive, low-cost investing. Vanguard is a titan in the industry, widely trusted for its index funds and its investor-owned structure, which helps keep fees exceptionally low. The platform is built for one primary purpose: long-term wealth accumulation. It is the go-to choice for retirement accounts like IRAs and for building a diversified portfolio of mutual funds and ETFs that you can set and largely forget. The app itself reflects this philosophy. It's simple, functional, and definitely not flashy. It's not designed for the adrenaline rush of day trading, but for the steady, patient growth of your nest egg over decades. The main drawback for some users is this very simplicity. Compared to Webull or even Schwab, Vanguard's platform has fewer advanced trading features, and its mobile app updates can feel slower and less innovative. It's not a platform designed to give you an edge in short-term trading. But that's the point. For investors focused purely on retirement and simplicity, this lack of bells and whistles is a feature, not a bug. If I were focusing primarily on my retirement and wanted a straightforward, trustworthy platform, Vanguard would be one of my top choices for set-and-forget investing. Its reputation is built on decades of putting investors first. Finally, we have Charles Schwab, the reliable, full-service broker that successfully bridges the gap between traditional investing and modern features. Schwab offers the industry-standard $0 commission for US stocks and ETFs and has incorporated modern functionalities like stock slices, which allow you to buy fractional shares of companies for as little as $5. This makes it easy to invest in high-priced stocks without needing thousands of dollars. For users who prefer a more hands-off approach, Schwab offers an excellent robo-advisor product called Schwab Intelligent Portfolios, which builds and manages a diversified portfolio for you. Where Schwab truly shines is in its combination of a robust feature set and outstanding customer support and reliability. Its infrastructure is solid, and its customer service is known for being responsive and helpful, which provides a sense of security that some newer, app-first platforms can lack. It's a great all-around choice for someone who wants a bit of everything: modern tools, low costs, and the backing of a large, established institution. If I were looking for a platform that balances modern features with proven reliability and strong support, Schwab would be my pick for a stable, all-around choice that can handle both simple and complex financial needs. So, let's recap. Fidelity is best for core long-term investing, especially if you want to take advantage of its zero-fee funds, but remember you're locking yourself into their ecosystem. Robinhood is incredibly easy to use and great for getting started, but you have to watch out for those hidden costs from payment for order flow and execution spreads. Webull is a fantastic playground for getting into technical analysis and more advanced trading. Vanguard remains the ideal choice for long-term retirement planning and pure, passive investing. And Schwab offers a fantastic balance of advanced features, unquestionable reliability, and great customer support. If I were you, here's how I'd approach it. I'd invest my core, long-term money in either Fidelity or Vanguard to benefit from their low costs and trusted reputation. If I wanted to explore more active trading or specific chart setups, I'd use Webull as a secondary, smaller platform. I'd keep Schwab in mind as my rock-solid backup, knowing its stability and support are top tier. I would only use Robinhood for very small, quick trades and would remain cautious and vigilant about the quality of my trade executions. Right pointing backhand index, which app do you use? Drop it in the comments, and subscribe for more investing breakdowns every week.